India's real estate sector has been on a roller coaster ride for the last few years, especially the residential sector. The latest curveball coming its way has been a liquidity crunch. The biggest lender to this sector, the NBFCs or non-banking financial services companies, have tightened the purse strings, trying to put their own balance sheets in order after years of reckless and risky lending. Now, the big question is, what happens to projects under development if builders can't get the financing? 5 lakh apartments across India are due for delivery in 2019 alone. Will they get delayed? Further, what happens to them? I caught up with Khushru Jijina, MD of Piramal Capital and Housing Finance earlier this week to find out how deep is the pain going forward and what 2019 holds out for the buyer, the developer and the NBFCs. I started by asking him, is the worst over or not just yet?
I think so. And I think, again, that has not got to do with the future. So that doesn't mean that only 10% will be the funding in the future. But it had to happen because let's look at what happened in the last 4 to 5 months. In fact, when the whole crisis broke out, everybody in all the NBFCs, including us, let me admit, were having problems. All our lines got cancelled. It was only after a few 15 or 20 days that the banks started realizing that with which NBFC they need to start working. So, you know, there was in a way there was a realignment in the banking funding for the NBFCs. We were one of the few ones, I would say, which actually in the last 3 months have been able to tap long-term loans. In fact, we announced more than 10,000 crores. In fact, in the next quarter, we'll be actually having foreign ECB borrowings and other long-term borrowings. So yes, it will come back. I do believe it will take another 6 months for
So the worst
this market.
is not over yet.
Worst is not over. I do believe the next 6 months will be fragile. But the good news is this, that as we have been saying about the consolidation in the real estate industry, we now truly believe there will be consolidation in the NBFC space.
Coming back to real estate now, so it is not a short-term thing. It was not a crisis of confidence, really, isn't it? This crisis of NBFCs pretty much brought to the surface the quality of or poor quality of assets that some of these NBFCs were holding. What happens now when these companies don't get the next round of refinancing? There is about 5 lakh number of units which were to get ready and come to the market in 2019. Khushru, do they get delayed more? And does that mean more distrust amongst the home buyers?
So I would first of all say that there's not going to be general distrust. First of all, let's not paint this whole industry with one brush. Let's go back to your question. What is going to happen the way we see it? Again, I go back from what we have been saying for the last 3 to 4 years, that consolidation is happening. And in fact, there were a lot of people who asked me.
Is it going to be faster now, the consolidation?
Yes. So in fact, many people used to ask me that where is the distress? We don't see it. You keep on talking about it, that only few will survive, many are dying. And we did say this. In fact, much before this mayhem happened, our chairman, Mr. Piramal, did say it in August itself, that this will happen one day, because these are the guys who are unnecessarily keeping this guy alive. The NBFCs are keeping the distressed developers alive. We have already started seeing the distress hasten, the consolidation happening. So 2 things are happening here. One, we have already started seeing the distressed developers along with the distressed NBFCs who have actually started approaching us and the good developers. And today the NBFCs, I would say the smarter NBFCs who are in distress, are happy to take haircut and move on in life, which we have started seeing, which was not there before the distress which started in September. So that's one thing which is happening. The second thing which I do believe is that because there's so much distress in the system, it's not going to get over. It's not that everybody is going to be saved or everybody is not going to get married, if you understand what I mean. So you will find in the cities around you many buildings which will be left incomplete for a long period of time till a real boom comes. Because you cannot expect all developers, the good developers, to take over all the projects.
Which is what I'm worried about. So you have this whole bunch of projects. We know some of the big names like JP, Amrapali, etc. in NCR. You have a couple of projects here, whether it's Nirmal, Akriti, Uptown projects, DB projects, which have been stuck, right? The question that if they don't get refinanced, there is no question of these projects seeing the light of the day. Then there are other developers we are not aware of who may also fall into the bracket of not getting that money to be able to complete projects. So won't the distrust, spread a little bit more?
Yes, to a certain extent I would agree with you. But having said that, I would give you a counter also, which we have been saying for the last few years, that the majority of the people today know whom to back. It's not something which has suddenly come up. Yes, had the distress suddenly in the real estate and the NBFC come up, maybe I would agree with you fully. But if you look at it, what's happening in the last 3 years, what have we been saying with data? I think in the last interview also I told you that our data clearly proves that our developer, whichever region you take, whether it's NCR, Mumbai, Bangalore, Chennai, whichever, our developers whom we think are going to get stronger, 7 to 8 times is their sale, 1/3 is their inventory compared to the average. In fact, let me give you some data points in the last 4 months, because everybody would think that the sales are zero or maybe very less.
We don't believe sales are zero. We just believe that they are much lower than the peak, for sure. They might be slightly better than 2018 now, but they still haven't gone back to the 2013-14 levels.
Yeah, but let me complete, because again, I don't think we should look at sales from the industry. I think it should go with the story of consolidation. Let's look at NCR, because it's the worst performing market. In the last 4 months, which is October to January, if you look at sales by ATS, it's 600 crores. If you look at M3M, it is 800 crores. If you look at Gaursan, it is 1000 crores. Bangalore again, Bangalore has not got caught into this whole thing. Again, don't paint the entire country with one brush, I would say. Bangalore is doing well, 1400
So
crores.
you're saying that the pockets of distrust have been known, and it's not likely to spread much more beyond those known names and developers?
Absolutely.
Okay.
Absolutely.
Then let me come to you. Spoke about ATS, and I know that you've lent to them. It is one of the best performing, they are one of the best performing developers in NCR. What about your own loan book, right? We've seen the numbers, December quarter, they look good. But have you refinanced new projects, or are you refinancing the same developers?
So,
because HDFC has pretty much not refinanced anybody new since that October crisis.
very good point. But again, I go back to, it's not the last quarter. If you have looked at our thesis, because if we are saying this for the last 3 months, that we have selected our developers, if you look at this entire last 1 year, we haven't really gone and spread our wings to new developers anyway. If you really look at it, we have stuck to our developers as partners. We have identified them long before the crisis. And in fact, probably we were the very few in this last quarter who kept on financing the construction, because at the end of the day in real estate, it's a very simple game. As long as there is equity value in the project, you need to complete the project. In fact, I say this to all the other lenders also. Let me use this opportunity on this channel to even tell the other lenders that the worst thing to do is to stop funding the project which is about to get complete. Because if the project gets complete, and if you have a good security and a cash cover, believe me, in any market you can sell. So otherwise, if you stop it, you are going to hurt the developer and you're going to hurt yourself. So coming back, this is what we did in the last quarter. We continued to ensure that the construction doesn't stop. Please understand, if construction stops, everyone's getting hurt. And that's what we did in the last quarter.
What is the run rate now? I remember at the CREDAI conference, that is before the liquidity crisis, that you had talked about 2,000 crore per month, right? Is that, has it come down, or are you maintaining that run rate?
So if you look at the last quarter again, it used to be 1,500 to 2,000 per month for real estate developers.
Right.
We did 6,200, it's a published number in the last quarter, out of which 3,900 was to the real estate developers, which is not a small number by any means. However, it was lower than 4,500 crores. But the maximum gainer again, we used to do around 800, 850 crores for retail every quarter. We did 1,700 crores because that was the opportunity. And that's what I'm saying again.
So there will be a little bit of a shift towards retail finance.
And again, the CFG portfolio which we have, where we lend to logistics, cement and renewables.
Have you reached a situation where you had to finance the developer just for the interest payment due to Piramal?
No. So in fact, what I'm about to tell you anyway, we shared it with our investors and the board in the last investor call. So what we really did was, because the mayhem broke out, and actually we are used to it, last 3 years there's been some tsunami or the other, and when this mayhem broke out, everybody was talking refinance is dead, what will happen to Piramal's book, etc. So we actually looked at our 400 and odd projects, and we tested them on 4 parameters. One is the cash cover, whether the cash cover today stacks up with what we had assumed at the time of sanctioning. Which projects are significantly delayed? Third, if the prices of all our projects crash by 20%, is there equity value left? Because if there's no equity value left, even Piramal can't do anything. The developer will hand over the project to you. And the fourth, we tested it, that if only 30% of the sales, which is assumed from today onwards, happens, only 30%, and with the balance funding I have for that project, will I be able to complete the project? You'll be happy to know that more than 90% of the projects of ours came within that category, in spite of testing it on all 4. So really, it goes back to the point which we make all the time, that it's ultimately our underwriting and processing and monitoring which is really different from most of the competition today. So to answer your question, really not required to fund the interest, because our underwriting has to the time of demonetization, GST, and it's through the time of this crisis also.
You will have a lot of opportunities now with this whole shakeout in the NBFC sector. Would you look at acquiring any of them, some of them? What is the opportunity for stronger players like yours?
Yeah, so our group philosophy has always been that you have to look at opportunities whenever they are, and this group is known for its opportunistic, both in way of buying and selling. So we are not emotional about any business. So yes, to answer your question, we will be looking, and we are looking at various opportunities today in the space to grow, because we do believe that the future actually for a few NBFCs is going to be far brighter than what it was before.
So within the NBFC space, how many do you think will be left standing
I think
in a year from now?
I do not want to give any number, but yes, it will be very few and far between. That's what we strongly believe, and then this will create deep partnerships in the sector, whether it's real estate or non-real estate. Let me also add, we are not only in real estate, we are also into the non-real estate sector.
So where do you see, I mean, where are the opportunities for a business like yours in terms of what, if you can't keep chasing the same developers, there is a limit to how much you can fund them, isn't it? Or do you think they'll have enough expansion plans to take all the money, or are you going to look at other developers, other businesses?
So I think very interesting question. I think I would answer it in two parts. I would also like to share with you that certain shifts in our business, thanks to this last few months, you know, everybody has to always learn and shift. And I think that's what is the reality of life. I think a couple of things on our platform, you'll see the shifts. Of course, I would say that our relation with the developers will get stronger and stronger. There's no doubt about it, because our partnership model does work. However, we have said it in the public domain, and this is one of our shifts post this mayhem which has happened in the last 4 to 5 months, that we won't have a single borrower on our books. In other words, in the past, if you would have, say, issued a check to Lodha of 4,000 crores, today I may still do it, but I would have partners which we have already tied up, which are mainly in the form of sovereigns or foreign banks who are not very active in India, who would actually participate with me.
So that's been a learning.
So that would be a learning or a shift. So while we will do this, this is the feedback we got from our investors. So I think that's very clear that we will grow our book slowly, because now having reached 60,000 crores, I don't think there is any sense growing your book by 50%. There can be an accident in future. So we will be growing around 20-25% in future, which is normally the norm for any mature NBFC. Our single borrow limit will be within the 15% of our net worth. And having said that, at the front end in the business, we'll continue to be relevant. Other one is, which we realized was the biggest opportunity in the last quarter, was actually our housing finance, because many of the companies stopped giving housing finance, and we actually increased our book of housing finance from 4% to 7% of the overall book. I think we have already made that statement that will be the fastest growing next year. So you will see us.
The base is smaller, should be.
Yes, and also we are opening a branch per month. So you will see that as a growth. And the last but not the least is the generation of fee income. Thanks to this tie-ups, thanks to the churning of the book next year, you will see that not only are we making money on interest, you'll actually see us making money on downselling and co-investment. I think that's the shift you'll see in Piramal Capital next year.
What I'm hearing is that yes, there will be diversification from a large amount to one developer, concentration not more than 15% of the net worth to one developer, and B, both to housing finance and non-builder debt is likely to go up.
Exactly.
In your books.
So if I've explained right, as far as the business goes with the developers, it remains the same. However, my book will look more diversified and granular. That's the difference. That's the shift. You'll see that.
Piramal Capital has been one of the most aggressive lenders to real estate in 2018. So far, they claim they have no stress in their books. But for the sector as a whole, more shakeout is imminent, which could be an opportunity for stronger NBFC players as well as stronger developers. When we come back, we look at the beeline of US developers wooing Indian investors under the EB-5 program. And what does that really mean?